following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks, and a great week. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials down 91. NASDAQ is off 6. S&Ps are down 10. Gold contract down $18, trading at $12.01. We get silver down 30 cents, $14.95. Let's go right over to the gold market first and take a look at the gold market. So, gold contract out here, we're trading down hard. You get volume behind the move. Right now, we've done 353,000 contracts. You're taking out a B point of another ABC structure on the way down. So let's take a look at this. So you get an A point out here is 1278. Your B point, let's see, actually your A point is actually 1244. Your B point is 1212. Okay, so we got you get about 34 bucks. That'll get you down to 1190. That's on the short term. Now, if we pull this baby back in a continuous contract and take a look at it, you're laying out. We broke the 1204 area. The continuous contract got down to 1191. You're dealing with, you're dealing with 1179. We're dealing with this heavy downdraft that was out there in December of 2016. You know, so your next level here, we're right at it, 1194. You don't have a hill to 1194. This can get into, let me put this on a monthly for a second. Okay, so the highs of the lows on the monthly is 1186. 1186 is the number. That's the number. You get into 1186, and if we get too many points into that, that could be real problematic. Silver, we're going to take a look at the silver market. Silver also, this thing got hit hard. Silver's down 2% right now. Silver's trading at $14.99. 1 second there. Why isn't that coming up? Just 1 second here. SI. Okay, so it's not SIU 8. There we go. Okay, so silver's done big contract. We've done 98,000 contracts. You're breaking down. You're breaking a B point. Let's see what this one's doing. This has the juice. Okay, so the A point on silver is 1626. The B point is 1518. You're talking a $1.07, which will get you 1463. Right now you're at you hit 1497. So big numbers. Big numbers. XAU, HUI, we take a look at the XAU. XAU's down to 220. Now, I won't get the volumes until 8 o'clock tonight inside the XAU. The break, though, of $71.63. Now, it hasn't done it yet. Well, it did it intraday. We went to 71.29. That's the number to keep your eye on, because if we do break that with conviction, it's big problems. Because when we came off that low in 2016, it was a rocket ship coming off that low. The XAU had gone from $38 nonstop up to 93 in the course of started in January and finished off in April. Gold Bugs Index, with the Gold Bugs Index, did do last Friday. It did break that big swing area, which is crucial. The swing area we're talking about, same type of swing area, which is on December 16th, 160. So this is a problem in paradise. There's no doubt about that. You're coming into strength, and we'll see whether they can get it turned around. But right now, being down at 154 is a problem, no doubt. Now, you're not breaking that with volume, but you still got a problem child. And the way that would be set up, there's not much in the way between here and, well, 153.17. That would be the next level that you could expect any type of support. Some of the higher volume equities out here, if we take a look at the S&Ps on this Monday in the summer, you have Advanced Micro is up 66 cents. You have Apple up $1.82. We get Williams Company down $1. Amazon, so a couple of the big dogs, they've been giving it up a bit. We had Amazon make an all-time high today, $1,925. That sold $25 off its high. We get Google out here. That was up at $12.49. That sold $10 off its high. Facebook, let's see where that's shaking out. Facebook was at $182.61. There's not much left of Facebook. Facebook has that monster gap on the way down. It doesn't look like it's going to basically get much going. That's when Facebook had gapped down on the 25th of July. We had closed at $218. It opened the next day at $173. That is having a tough time, bottom line, getting through any of that huge downdraft that it had out here. If we go take a look at the small caps, the IWM. IWM out here today. IWM right now, we opened up at a price point of 168.05. Right now, you're at 166.82. What the small caps will have, folks, is another expansion of volume. So all the indices did come down on Friday with volume. What we have out here today is that you're getting an expansion of volume in the small caps. They'll throw some juice into the small caps at the close. On Friday, we did 20 million. Right now, you're at 14.5 million, and the small caps do generate volume coming into the close. Notes and bonds. Let's go over to the TLT. So the note and bond market, bottom line, higher price, lower yield. Pretty amazing, actually. Even the TLT. TLT, bottom line, goes topside on Friday, has the volume behind the move. Looks like it's building more cars and wants higher price. Stay right there, folks. Come right back when I'm at Mr. Steve Rhodes. We have the Dow Industrials right now down 69. NASDAQ is flat. S&Ps are off 7.5. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now is down 61. Nasdaq is flat. S&Ps are down 6.5. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. The way you can get that Mastering Probability, which is the #1 market. Steve is the #1 market timer for the S&P 500, according to Timers Digest. And that's very hard to do, by the way, folks. Come over to our website at TFNN. You go to newsletters, you go to trading newsletters, you can get Mastering Probability 30 days, money back guaranteed. Steve Rhodes, what's going on?
Well, it was a great weekend of sports out there, especially if you were a golf fan.
Pretty amazing. Yeah.
Yeah. Did you catch some of that PGA tournament?
I was watching it all. I was sitting in the office writing the gold report, and Tommy texted me saying Tiger's making a comeback, and I pulled it up. Yeah, it was pretty amazing, man. Yeah.
Absolutely. Yeah, it was great golf. You know, that Bruce Koepka.
Yeah.
But just the shots actually that each of these guys were pulling off was just simply amazing. So it was great sports out there. And so let's talk about the sports of the markets.
Okay.
And let me give folks a feel for what the #1 market timer in the S&P 500 sees at the moment, and what subscribers and I did on Thursday of last week. And Tom, this first chart that I have up on my screen here, it's a 5-hour chart for the Dow. And the Dow last week had been performing very well. And one of the tools that I use, I call it the Rhodes Momentum Indicator set of tools. What it does on this chart here, it begins drawing these black diagonal lines, either at highs or at bottoms. Now, there's a series of 5 steps that I have taken subscribers, and those folks that would like to learn those steps, they just simply have to sign up for Mastering Probability, and they can go through a 1-hour workshop. But what we do is, these are early signals of a potential change in trend. Again, there's 5 steps to it. And one of the steps that we took a look at last week on Thursday was the fact that we had that signal. It was taking place about 5 o'clock in the evening on Wednesday. But by the time we got to the trading time frame of the opening bell, what we saw was price move below this little red kind of stair-step line out there.
Yes.
That happened to be the bottom of a TAS market profile. So I like to use the TAS profiles, both the top and the bottom, as support and resistance. And in this case here, when you see price break through a level of support, says, okay, game on. And that's what sellers were communicating to us last week. So we went went ahead and we took the short position, and we took it in the S&P 500. If we take a look at a larger perspective of the S&P, in this case via the ES Mini. Now, these are daily time frame charts that we're looking at, and these show the daily for the ES Mini, for the NQ, for the Dow, and for the Russell 2000. What was also taking place last week was we were seeing price trade below, and it finally did close below the bottom of the profile on a daily basis, and that was at 28.42. Oftentimes, what will happen if there's a change in trend is old support will become new resistance. And what we saw take place today in the bounce thus far was we saw price get back up and test that 28.42 level and then give it up. So now we have a very clear level of resistance. Now, I would change my mind about the short side. If we come in tomorrow and price is trading above 28.42, I would have to reassess that idea. But at this stage of the game, this tells me between what I saw going on inside the Dow and what was taking place inside the ES Mini that there's a short-term change in trend. Now, back to the Dow for a moment. If we take a look at the YM out here, price today has found support at the bottom of that profile. So this is a key level of its profile, I should say. So this is a key level, Tom, that I'm watching, which is 25,201.
Okay.
If tomorrow, folks, and you know, we've got another 40 minutes worth of trading or so. If you close below that today, boy, that's another signal that the markets, or at least two of these markets, want to trade lower. It doesn't have to happen, you know, at today's contract close. It can happen overnight as Asia is trading, as Europe is trading tomorrow. But 25,201 is a key level for listeners out there to pay attention to. I'm referring to more of a shorter term, intermediate term duration. I'm not talking about long-term investment portfolios out there, but just trying to give folks kind of the sports play-by-play as to what I see going on inside the market. The NQ has been very strong, and the NQ hasn't even come down to test the bottom of its profile that formed today. And so a key level there, support is 73.59, resistance is 75.05. So it's kind of uncertain as to what it wants to do. Now, I think for the markets to really get moving to either side, the NQ has to make up its mind. So it's kind of, Tom, like it didn't get the memo, or it didn't get the memo just yet.
Right.
Now, the Russell 2000, just like the NQ, is trading with inside its box. So support here inside the Russell is 1659. That's another 20 points to the downside. And based on what I'm seeing in the ES Mini, well, if we get a confirming signal inside the Dow, I would expect that the Russell 2000 would get down to those levels. So that's what I'm seeing on a intermediate term, short term basis. Another thing that gives me the indication that this is what the market wants to do really comes from the New York Stock Exchange. Now, we can't trade the New York Stock Exchange, you know, as an ETF out there, but there are some great signals that I like to pay attention to, and those are divergent patterns. And the top portion of my screen is the daily chart for the New York Stock Exchange. You'll see some green diagonal lines from lower left to upper right out there. And those lines are coinciding with panel number 2, which is the advanced decline oscillator reading. Now, folks, the advanced decline oscillator is a difference between two exponential moving averages. In my case, I use the 39 and 19 period exponential moving averages. What's unique about this pattern, Tom, is when we have a declining tops oscillator line and prices moving higher. It's unusual, but when we do see it, it's a signal that says, okay, be careful. And we had the most recent signal during the time period of July 13th, really all the way up until August the 9th out here. We had price moving higher, but we had an advanced decline oscillator reading. And the advanced decline oscillator got below zero. And when it gets below zero, it says that sellers are in control of the market. The real trigger, kind of like the fuse for a firework, just happens to be when the spot volatility index closes above its 50-day exponential moving average. That would be 1328. We're at 1448. When this whole combination comes into effect, what typically happens is it's the fuse that starts off a fairly precipitous decline out there. And that's what I'm still expecting. Now, how will we know when that decline is over? I'll be looking for Rhodes Momentum Indicator signals. I'll be looking for the New York Stock Exchange advanced decline reading to get down into the minus 250 level. We're only at minus 103 as we speak right now. So it's just patterns of the past that inside the market repeat over and over again. And these are the signals that I'm seeing again on a short-term basis. Long-term basis, Tom, whole different story. And this chart here takes a look at 9 different ETFs from around the world. The upper left-hand panel is the Dow Diamond. So we've got the Dow Diamonds from left going down and over. We've got the Dow, we've got Canada, we've got Germany, United Kingdom, China, Japan, Australia, India, and we've got Turkey. And if we just take a look at normal trend lines out here, the only 2 world markets of these 9 that are moving to the upside are the U.S., and I'm using the Dow Diamonds, which is the weakest of our, let's say, 4 primary indices out here, and China. The point is money has to flow somewhere, and money is flowing into the United States long term. Long term, mastering probability is very, very bullish. But in the short term, we're going to have a pullback.
Folks, come over to our website at TFNN. You're going to go to the newsletters, trading newsletters. You can get Mastering Probability 30 days money back guaranteed. Check it out right now. Steve, thanks so much. Look forward to the show tomorrow.
Thanks, Tom.
Thank you. Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 97. You get the NASDAQ up 11. S&P's down 11. We go inside the Dow Industrials, folks. Take a look at the strength versus the weakness out here. Point-wise, what you have is this. Putting positive points into the Dow, Apple. Apple's putting 10. You get United Health putting 6. Merck's putting 4. Negative points. Goldman Sachs, negative 17. 3M, negative 13. JP Morgan, negative 11. Home Depot, negative 11. IBM, negative 11. Let's go over and take a look at a few of these financials. So we'll start with JP Morgan. JP Morgan almost got to the highs. Last 6 months was 119.33. We made 118.24 last week. Anemic volume, so the bottom line couldn't reach the baby. Now you're coming off it, and you're getting back in the lower ranges. Once JP Morgan got into the 114.73, that sets up your next leg where the strength was, which is 110.77. So that's a long way down from where we are right now. The XLF, let's go take a look at the ETF structure for the financials. That baby's down at 23 cents right now. Not that that's a lot, but it's $7 stock it is. And you have expansion of volume on the way down. This consolidation that we've been in inside the XLF since March, bottom line, didn't make it again. And on top of that, folks, what you did do is that you came off that high island top with volume. Bottom line, now this is a different animal because what this sets up going down to the lower end of the consolidation that we're in. Now, the lower end of the consolidation is laying out here at 26.31. We'll go into the XLE, the energy markets. This on Friday had a lower low with volume. That being said, it ended up finishing positive. What you have out here today, you're going down, you're testing that low. It doesn't look like it's going to hold price. So the XLE wants to go after the $73.14. Right now, you're at $74.50. We're going to take a look at the two big dogs inside the XLE. Chevron is the largest weighting structure. That's off 61 cents. No big deal there, but not up. ExxonMobil, big deal. What you have with Exxon, Exxon actually is a small ABC down. Yeah, look at this. So Exxon broke a B point of an ABC down on Friday. Your A point out here, 84.40, July 26th, 84.40. Your B point is 79.40, so you're talking $5. Your C point is laying out on the 7th of August at 81. So we're talking what, $5? We're talking about 76.69. Yeah, 76.59. That's saying, well, that's a long way down. Okay, so that's saying we're also going to run down more than likely the May 3rd swing area. And bottom line is this is saying that those, so when we take a look at the financials first, they want lower price. You take a look at the XLE, the energies, they want lower price. That just in itself, folks, for the Dow Industrials as well as the S&P sets up a little problem child here. Now, SMHs. Now, the SMHs were getting some strength out here today. At the beginning of the market, bottom line had some good strength. The SMHs had been up to $106.67. They also sold off. This is going to be a big failure for the SMHs. They had gapped lower on Friday. Thursday, we closed at $108.83. Friday, we're down to $105.16. Today, you get over the high. We got to $106.67, gave it up. This SMHs, this wants to get down to $100.90. So we get some action out here, particularly, folks, you got to remember something. You're in summer trading. Mondays and Fridays in summer trading, most times not only the lightest, you just don't get a lot of movement. Now, that being said, because of over the weekend, because of last week, with the Turkish, with the lira, with emerging markets, we are getting action. And it's just a matter of when. My take on it is a matter of when this contagion really hits. And this is why. It's amazing to me that all you keep hearing is that, no, it's Turkey, you know, emerging market, yeah, not a big deal. Contagion's not. There's 80 million people in Turkey, folks. Bottom line is that, yeah, it's an emerging market, but guess what? There's 80 million people in Germany, too. The Turkish lira right now is trading at 7 lira to $1 US. If we go back 6 months ago, it was 3.7. So that's a total implosion of wealth extraordinaire ASAP. Well, guess what? Someone's going to be holding the bag on this. And holding the bag specifically would mean what banks are holding the bag, what banks are holding the debt, what funds are holding the debt, because guess what? It's not going to be paid. That's the real bottom line. I believe one of the Spain banks, is it BBN? 1 second. BBN. one of the targets can be that Spanish bank. I had it up here this morning. I forgot. Thank you, BBVA. Thanks, man. Thanks, Z. So watch this. If you want to see, now this bank here, folks, this bank is going to be toast. This bank, the low for the year is today, $6.15. The highs, $9.54. Bottom line is that this bank is supposedly holding 30% of its assets in Turkish debt. This thing is toast, man. I mean, it's coming down. It's coming down. You know, it looks to me like you're going to go test $5.14, which was the low that was established in 2016. Bottom line, thing's a mess. You know, you get high volume lows at $5. It's going after the $5. We had a high out here at $23. Let me just see how much money they actually do out here. So revenue-wise, this would be in euros. They do 24 billion in euros. They got it broken out, too. They're lucky that, corporate, 74, yeah. They're lucky that most of their businesses, actually, most of their business is in the United States and Mexico. That being said, if they get 30% of, it could be 30% of their assets. No, I don't know exactly how many of their assets is, but bottom line, there's some numbers there. And that is not going to be the lone soul out there inside the Turkish market. Because what you also have is this. Now, check this out, okay? This is emerging markets in general. What has happened is that the rand in South Africa, that thing got smoked. So check this out. The rand on Thursday was trading 13.2 rand dollars to $1 US. Now it's 14.50. If we go back to 6 months ago, it was 11. And if you want to see something that's really bizarre, now this is pretty intense. The rand had hit $17.91 in 2016. Now, if we go over a couple of the gold miners here, then it's not that they're going anywhere today, but Harmony's up 2 cents. What's intriguing here is that the gold companies in general, or miners in general, you know, gold in particular, the reason being is that their expenses still are in rand dollars. They get paid in US dollars for the gold. You know, when you do see the rand implode, most times that you're going to see these miners take off, you know. We'll see how this baby shakes out here, because the physical metal, there's no doubt, hasn't been going anywhere but down. Stay right there, folks. Come right back. We have the Dow Industrials down 87. NASDAQ is off 5. S&Ps are down 10. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow down 98, Nasdaq is off 7, S&Ps are off 11. If we take a look at the indice volume out here, folks, inside the NYSE, we have 421 million, which is a light volume. I do expect it'll pick up to about 650, get about 15 minutes. Nasdaq volume, also light volume, 1.568 billion. So that will probably do about 1.7, 1.8 billion. Some of the, if we go inside the NDX 100, we take a look at the strength versus the weakness. Your strength out here is Dentist Supply. That's up 1.7%. This stock is a stock that already got smoked, folks, on the way down. CLAC, KLA 10 killer up 1.5%. You have a BioMylin up 1.4%, and T-Mobile is up 1.1%. Now, you can see the other side of the ledger here, big numbers on the way down. You get NetEase down 4%. Holistic is down 3.9%. We have Priceline down 2.2%. If we go and we take a look at Priceline, when this baby goes south, man, does it like to go south. Priceline last Tuesday was trading at $2,109. You're at $1,854. This broke down when it came out with its numbers with volume. So the way this is set up now, when I take the highs to the lows, let me pull this back a little bit closer. Yeah, this is a problem, child. You broke the whole consolidation here. So 1982, it's a big number. You got 82, 28, that's 18, 28, 38, 48, 46. So you're $246 away from 1982. So 17, approximately, he says 1740. Yeah, about 1740. And right now you're at 1854. What this does have, this is where it's going. You get the high volume swing point from November of 2017. That's game. We put this on a monthly. Yeah, it's sticking out like a sore thumb. We'll see where this shakes out, but that's sticking out and sticking out pretty good. The NDX, let me just pull up. So NetEase also, this thing really got smoked on when it come out with numbers also. Now this is going to be an ABC down. So NetEase has just gone from $329 to $215 in 5 months. It's gone a lot further than that. Wow, baby, this stock. So this stock's going from $377 down to $215, 3.1 million. Okay, this is really close. It's not going to be an ABC structure on the way down, but man, it was close. Let me pull this back and put this on a monthly. Yeah, you know, this went up on air, and guess what? It's coming back with volume. Your next stop on this, we're 215, 211's your next stop. Let me pull this closer. on a monthly bit. You know what it's going to be? Well, check this out. It is, well, 10 million, 4 million. Yeah, this. Okay, so the way this is set up, it looks like it's going to be an ABC structure on the way down in a monthly, and it's a big one. The A point is 377, your B is 222. So you're talking about $1.50, which will get you into $1.20, $120, and $120, yeah, is set up somewhere down into November of 2015. And if that's what we get, you know, out of something like this, you're going to want to start looking at a couple of the companies inside this sector. So this is an internet technology company to develop application services, other technologies in China. The core business consists of email service, web portal, online entertainment. Interesting. So that is taking a hit, and a hit in a big way, no doubt about it. Yeah, let's go take a look at Deutsche Bank. So Deutsche Bank, no doubt, is the poster child anytime there's anything going on actually in the world, because they're so big, number one, they are so sick inside the derivatives market, number two, and this thing has been on life support, you know, since going all the way back to 2008. 2008 hit a low of $16. Guess what? We're $11.46. This is one of the equities that are actually below the 2008 levels. It looks to me like it's going to test out the 998 once again. The 998 level is from September of 2016. So we'll see where this baby does shake out. Goldman, let's go over to Goldman Sachs. Goldman is one of the leaders on the way down today inside the Dow. Goldman did like an anemic dead cat bounce when the rest of the financials were actually doing something. If we take a look at Goldman, what you're going to see is that Goldman was trading 5 months ago at 275, gets down to a low 2 months ago at 218, does a 0.382 retracement, gives it up. This big baby not only gave it up, we had volume on Friday. If I put this on a weekly now and take a look at it, what you're going to see, the bottom of this consolidation we're now in is 218 to 209. If we break that 218 to 209, you're going to see this very quickly down into the 200 levels. Because what we also did is we got back, yeah, you see, this got back inside the 250 again. This is a big problem. Hey, we'll see. Let's go to Bank of America, because the BAC, that's also down on volume. Well, what I suspect we're going to see here, folks, is this. Everyone's keeping quiet as to, you know. So, picture. I'm gonna rewind you to 1998. 1998, when the long-term capital got Asian contagion, folks. What happened is that it was going on for about 3 or 4 weeks over in Asia, Indonesia to be exact. Then when it spread from Indonesia to basically the Russian currency. And what happened is this, like for 3 weeks, you know, people are talking about it, you know, on the TV every day, but nothing heavy, like way over there. Then what ended up happening is that it seemed that it was out of nowhere. It wasn't out of nowhere because, of course, people in New York, there's some people in New York, there's some broker-dealers that knew what was going on. And what it had to do with is that there was a large bet by long-term capital in the Russian market. Russian market, now, as it was then, emerging market, currencies, bonds, that imploded. When that imploded, what had happened is that our banks were on the hook for long-term capital. That is what started a contagion in a very fast and furious way. Now, that number, the thing that's amazing about that, and I'm gonna pull this up. If you happen to be in front of a computer, pull up Google, like what was the number that a long-term capital was going to default on. It'll blow your mind, meaning that it was such a small number compared to what we have been used to now. Okay, so now the numbers are much larger, but you would be really surprised what that number actually was in 1998. The total mind blower. One of the biggest mind blowers I got out of that, if you actually pull Merrill Lynch in that same deal, Merrill Lynch was not only broke, they basically turned around and transferred money outside of the country so they could be in business if, in fact, this whole thing imploded. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, if you want to hear these numbers, these are crazy numbers, meaning they're so small. So, long-term capital, September 23rd, 1998. That's when they had to get bailed out. The bailout, folks, $3.5 billion. That's what they needed to get bailed out. Now, check this out. This was the deal that's amazing, though. 16 financial institutions, bottom line, had to come up with it, so they didn't go south also. You know, the numbers now are so much bigger, it's insane, okay? Now, just think, if that was then, you know, stability-wise, folks, bottom line, leveraged, derivatives, all of the above, it's a big problem. Before they had to get bailed out, these are the numbers that they actually did. They opened in 1994. What they did in, let's see, so their first year, they made 21% after fees. Their second year, they made 43%. The third year, they made 41%. And the fourth year, they lost it all. They lost $4.6 billion in 120 days after the financial crisis hit in Asia. So it went from Asia to Russia, and that's how this thing imploded. And then, of course, it was our banks that were on the hook for a long-term capital. Bottom line, they put the money in. Now, that money that they put in, that they were still leveraging that money. They needed that money to win. And what did happen is that as that money went in, I remember this so specifically because that money went in. Alan Greenspan, let's see, Rubin went on the TV at 3:15 in the afternoon, turned around, reduced the interest rate by, I believe, 2 full percentage points. Market went to the moon. And never looked back after that. Simultaneously, all that happened. But and they're lucky. We're all lucky that that happened because when that did happen, those are still leveraged positions. You know, long-term capital, of course, wasn't able to take advantage of them because they were basically out of business. Pretty wild. Stay right there, folks. We'll be coming back with some numbers after the close. They sold this market into the close also. We had the Dow Industrials down 121, NASDAQ down 16, S&P's down 13.5. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks, and a great night. You are responsible for your own happiness. Happiness never comes from outside of you. If you put your happiness in someone else's hands, they can always take it away. Happiness can only come from inside of you and is a result of your love. Market-wise, let's take a look at it out here. We have the Dow Industrials down 125, NASDAQ off 19, S&P's off 11.5. Let's go take a look at the volumes out here. So you get summer trading, bottom line. You get some rough markets. Guess what, folks? They put volume into this market on the way down. Pretty amazing, actually, because we're watching this closely coming into the close. We had all of 403 million, 10 minutes left in the marketplace. Right at 4, we had 505 million. They dropped 240 million into this close. They don't want to be in this market right now. We did 745 million shares in the NYSE. On Friday, we did 852. So bottom line, that is a decent number and a big number into the close. NASDAQ Composite, not so big. 1.8 billion we did. Gold contract, they took that baby south with volume. Gold is trading at 1,200. If we go over and we take a look at that contract, what you're going to see, you went down today, you had volume in the move down, 360,000 contracts, big contract volume. This is a An ABC structure on the way down. It's taking a B point out. The A point on this, it's not a monster one. Bottom line is that gold hasn't been able to catch a bid since April 18th. April 18th, gold was at $13.77. You're $177 off of that level. Your A point on this is $12.44. Your B is $12.12. So what? 12, 24, 30, 24, 36. Yeah, you get 28 bucks. 28 bucks gets you down to 11. Oh, this is pretty cool, man. It's 11.97. We hit 11.98.60. Okay, we'll see where this shakes out. Silver. Silver also took a hit in the way down. Silver also broke a swing point, has volume on the break. Silver was down 2%, 31 cents today. Silver also hasn't caught a bid since the highs in April, in June actually, $17.43. We come down, we do 100,000 contracts out here today inside the silver market. The A point on the silver market is 16.26. Your B is 15.18, so we're talking about $1.10, which lines you up at approximately $14.80. This is pretty cool, okay? Meaning, what the cool part about it is you're not far from the A to B equals C to D structure. Right now we hit 14.97. You go over to the GDX, XAU, HUI, they all broke lower. The GDX is down 58 cents. You're trading $19.98. You get your swing point down here at 18.58. Now, it's going to take monster volume to break this. We did 1.7 billion. Oh, actually, let me do this on a weekly instead. I had it on a monthly. So we did 543 million. We did 70 today. It's not going to do the volume this week, but the bottom line, we'll see. Well, it's the beginning of the week, too. Doesn't mean it can't expand. Bottom line, you're coming into that swing. We'll see whether it holds. The XAU and HUI, they both, I believe, did not hold. We came down to 225, $71.61. And the XAU, that low there was 71.63. Oh, my God. Okay. So that's what we did. You're a penny underneath it right now. It's going to have to break further than that to actually break down, but that's the XAU. Gold Bugs Index had broken down on Friday. This broke underneath it on Friday. This is in tougher shape. The number inside the Gold Bugs Index is 160, and right now you're at 154. So that does set up, that sets up about a 147. Inside that Gold Bugs Index. Big numbers. Notes and bonds, they continue to want higher prices. Pretty amazing, actually. That's the real bottom line. But guess what? They're buying the notes. They're buying the bonds. We got to a higher price today. You had volume behind the move. You had it all. It makes sense in the context that, number one, you have more demand than supply, meaning as we're rolling our bonds over. King dollar is down 18.6. King dollar did hold price out here. Right now, King dollar is trading at 96.200. And if we do put this on a continuous contract, what you're going to see, King dollar was trying to take out the swing points from October of 2017 for quite some time. They started to try to take this out in June of this year, took it out, and you know, we didn't take it out with volume, but we took it out with a pretty good price. So King dollar right now on the continuous contract would have to get back inside the 95 area to be a failure. It looks to me like we can get up to the 96.695 area. Right now you're at 96.190. The lira over in Turkey, that continues to implode in a big way. Pretty amazing, actually. We're trading right now at 690 lira dollars to $1 US. And, you know, there's no telling how many other implosions this baby is going to take. What we do have technically is this. So when you look at this, it's like, okay, if I do a correlation or an ABC correlation, even without the volume, what you're really looking at is, let me see, 3.7. I'm going to do this at the first break. And where I'm going with this, folks, is this. When you do a expansion or contraction that is more than a 1.618 of the prior move, most times what you see is that those are blowout moves to the downside. They're blowout tops to the upside. And in this particular case, I suspect we'll find out whether we got a 1.618 or, in fact, we have a 2 to 1. And if that's what you got, you know, I expect you're going to see more than likely some turnaround. That being said, what we haven't seen yet is that you haven't seen who's holding the bag out here. You know, we have seen a couple Spanish banks that go south in a big way. European banks, they can have some problems. But what I expect you're going to have, there's going to be something that comes out of nowhere, or it comes out from another emerging market currency that turns into problems in paradise. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow finished down 125, Nasdaq off 19, S&P's off 11. And so check this out. This is pretty amazing, too. So we're talking emerging markets. We're going to get our head wrapped around currencies for a bit here, because what you have, folks, is that you have some implosions that are happening pretty quickly. Now, Argentina, okay, they've been having a problem also in a huge way. And Argentina always seems to have a problem. They go from great markets to bust markets, and it seems like their cycle is a very short cycle. Okay, they get money hand over fist 1 second, the next second they get inflation that goes through the roof, and bottom line is that they implode again. So if we take a look at the Argentina peso, this is what you're looking at. If we go back 4 months ago, it was 20 pesos to $1 US. It's 29 now. You want to see something really bizarre? Watch this. If I go back 10 years, this is like even hard to comprehend. It was 3.2 pesos to $1 US in 2008. Now it's 29.9 to $1 US. That's just, it's like hard to comprehend. Now, that being said, so picture this. The action is so heavy inside the currency markets right now that they couldn't slow, meaning their central bank, couldn't slow the selling of the peso, even when, wait to hear what they did out here today. Now, this is something that Turkey has to do. They're refusing to do it. They have the Erdogan son-in-law is running the central bank, so they're screwed, period. Bottom line is that watch what Argentina did, and it still didn't slow it down. They took emergency steps today to stabilize the currency. They jacked up their interest rate by 5 points today, okay? 5 points. Now, they already have the highest interest rate in the world. You know what the interest rate is right now, folks? 45%. Yeah, here it is here. Policymakers set the rate for 7-day notes at 45% and pledge they will keep at that level until October. The central bank is going to phase out their short-term notes in December. They have $33.2 billion in short-term notes, and they're going to sell $500 million at auction tomorrow in order to ease the pressure on the peso. That is one monster number, okay? You're talking about, can you imagine 45%? Big number. But so what ends up happening is that the only way that you can actually bring money in, of course, is that you keep pushing the rate higher so that other countries are coming in, other traders are coming in to stabilize the currency. That's what that's all about. 45% sounds like a great number, and if it is a great number, if the baby gets stabilized. If it doesn't get stabilized, it doesn't mean a thing. You know, the thing is, so watch what and I'm going to bring you back to the U.S. market here for a second, because we had problems such as that, and this is when we were running at 14% inflation. Now, the thing that's amazing is that in order to bring this back, and this is when our 30-year bonds, folks, were going for 58 cents. I believe that was the price. Got to bring it back. This is so long ago now. Let me see. I think in 1980 it was 58 cents. 55 cents. Okay. So in 1981, in September of 1981, you could buy a 30-year bond at 55 cents. That was paying 14%. And that was because our inflation rate was so dramatic. Now, what happened, that's when this thing also got cracked. So that was the low. And if you wonder how and why our bond market was the longest bull thus far, still the longest bull, it's because of that. When we started out with 14%, 14 to about 14, 15.5%. I don't think it ever hit 15.5. Might have been hit 15. Now, this is the 30-year treasuries. That's what they actually hit. Never mind someone else borrowing money. That's the U.S. government borrowing money. So what ended up happening? Well, we came all the way down. The short-term rate went to zero, right? Bottom line, 30-year didn't go to zero, but this would be predicated on the 30-year. But that's the amount of money that was made. Now, just to give you an idea, that $55 per $100 treasury. Now it costs you $144 for a $100 treasury for a 30-year. And what that's all about is the aspect that you're overpaying by $44. So when the treasury note expires, you're only going to get $100, even though you paid $144. The reason people will be paying that is that they also are thinking that regardless of what the Federal Reserve is doing, they're still thinking that rates are going to go down, and that number 144 is going to be the stabilizer 144, go up. It's not going to come down to lower price. It's pretty wild when you actually look at the structure of these, and then we look around the world. So around the world right now, this is what we have. We're still one of the highest rates in the world on the 10-year, or in the 5, 10, and 30. Right now, our 10-year is 2.8. You go to France, it's 0.6%. Germany is 0.3%. Italy, which is broke, is 3%. Spain, which is imploding, one of their banks are have so much debt from Turkey, it's in tough shape. That's at 1.4%. The Netherlands, no, Switzerland's still negative. Switzerland, you still have to pay them to basically give them money for 10 years. You're actually paying them. It's a mind blower, man. Japan, same setup. Japan still is flat. 10-year, if you want to buy a 10-year note from Japan, guess what? It's flat. Pretty amazing. So the skewing of the rates, you know, you can see when this shakes out. You know, when we take a look at the 2.8 on the 10-year, when we just took a look at the aspect of the amount of where we are short term, what you're going to see is that flattening of the curve has to happen, because right now the effective Fed fund future rate is 1.9. They just had gone up from, you know, 1.7, 1.5 to 1.7. Now they have a sliding scale of 1.75 to 2. The effective rate today is 1.91. The next meeting, which is going to be on the 26th of September, is 94% chance it will go from 2 to 2.5. Once it goes from 2 to 2.5, you can see the 10-year is only at 2.8. So that's going to get intriguing. What we also could see happen out here is that September 26th is a long way away. If we get contagion from one of these countries to another country, and you see the currency starting to implode, it's going to say quite a bit. And that will put pressure on our own Fed not to go up at this point. You know, right now, though, bottom line, saying, hey, we're going up, and it's not backing off. That's the bottom line. Some of the higher volume equities in this market out here today, in fact, most of the higher volume equities you're going to see are all in the red. We had the Advanced Micro, that was in the green. That was up 67 cents. Twitter was up 79. Nielsen Holdings was up 264. Apple was up $1.34. Snap was up 26 cents. That's, what, 5 stocks out of the top 24. The rest of them were all in the red. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at a few of these oil drillers. Rig, Transocean. This is a big number, man. This thing was down $1 today. It's $11.51 stock. Broke down, had a high volume low out here from the 15th of June. And if you want to see, bottom line, two different deals here. How high volume lows or high volume highs like to get tested. You want to wait for the test because guess what? In this particular case, it barrels down there, blows away it. You know, with 21.6 million shares versus 23. Now, 23 is more, no doubt. But guess what? When you come into a high volume, low or high, and you're pretty close to it, this thing's going to go a lot lower. Let's see if they come out with anything. Or is this just the aspect of? Okay, so no, this is just the aspect that the bottom line is that you are talking about oil pulling back slightly out here today. This company here specializes in large, huge offshore drilling platforms and drilling. And what has happened, folks, is that shale has basically taken this business apart, meaning that the amount that you have to pay for an offshore drill is huge. Well, it used to be huge numbers. You know, you're talking like $240,000 a day. The revenue, if you want to see something that you talk about going down, their revenue in 2014 was $9.2 billion. Their revenue this year is going to be $2.9 billion. So you can see they have 1/3 of the revenue. And bottom line, if we keep finding shale and the amount of shale that we've actually found is pretty amazing, you're going to see this company have a huge problem. Let me see where we stand here. So if I bring this back a bit. Yeah, this has been bounced along the bottom for quite some time. So, well, 936 is the next number. That's what it looks like. And, you know, we'll see where that does shake out. Tesla. We go to Tesla. Elon Musk right now, he's going to try to squirm out of, bottom line, what he said. It's going to be a problem, folks. Tesla itself, you're trading 356. Now, this is what's going on with Tesla also. Here, I'm gonna do the technical one first. So, technically, the way Tesla is set up, this is pretty wild. I'll bring this back, put this on a 15-year deal, even though Tesla's only been around since 2010. So, Tesla is a high-end consolidation. That being said, you have two different things happening with Tesla, and this happens in a lot of high-end consolidations. We have a high-volume low at $244 that wants to get tested. But guess what? Because of how we traded last week, we're also going to have a high-volume high at 387. So this is going to be pretty cool watching how this shakes out, because what I expect we're going to see first is this, is that we are going to see Tesla make its way down to the high volume low that's laying out here. That high volume low is laying out here since April, 244. Okay, that's the first one. Second one, however, if we get the test first, then you're going to, bottom line, test the highs. If we test the highs first and we fail on volume, then get out of the way, because then what you have is that's when Tesla would have finished off doing what it has to do on the top side, and bottom side is wide open. The aspect of what Musk is saying out here today, so picture this. When he came out at 1243 last week, he claimed a couple different things, that he was going to take the company private at $420. The biggest problem he has, not that he said that, the biggest problem that he has is that he had, quote, funding secured to take Tesla private. That is his huge problem, folks, because what ends up happening is that, number one, it's a material fact. That's what the market was looking at. When you get a material fact, that means, okay, I have the funding, I can take it private. You can tweet that out, as long as that's disclosure to everyone at the exact same time, right? Well, bottom line is that we're going to find out he didn't have the funding secured. In fact, what he said, this was on a word. That's what he's claiming. So let's see what they actually say in here. Elon Musk is finally offering more details on his bombshell tweet that he had funding secured to take Tesla private. Market uncertainty over, let's see, Musk sought to clarify by saying that Saudi Arabia's sovereign wealth fund had been urging him since the beginning of 2017 to take Tesla private. Musk's elaboration didn't wash away the investor confusion he triggered a week ago. Bottom line is that he's claiming that he had their word. Okay? You know, it's not even close. You know, bottom line is that this is going to be a problem in paradise, and we'll see where this baby does shake out. You got to remember a couple of different things with Tesla. So the attorney, they're going to play with words here. It's going to be really interesting. A different attorney from the University of Pennsylvania Law School is saying that it's far from black and white what Musk actually engaged in. Okay, so watch how this is what lawyers are so good at. There's no doubt. That's why they go to law school. He didn't say a deal was secured. This is Jill Fish, who's the co-director of the University of Pennsylvania Law School's Institute for Law and Economics. He didn't say a deal was secured, Finch said. There's a big space between I have funding to do some sort of deal and the deal is actually going to be happen. Yeah, well, he didn't say that he actually had funding to do some sort of deal. He said he is taking it private at $420, and he said it's fully funded. So they'll fight it out. Bottom line, Tesla holders that bought that day, they're going to get paid. That's my take on it. It's only going to be now, and that class action, folks, more than likely will be about a 24-hour deal inside of if you bought and or sold Tesla during that time frame. That's how I expect it's going to basically turn out. We get over and we take a look at General Motors. General Motors, let's see. That's going the lower end of consolidation. We just went $44 to $30. We get Ford. Oh man, look at this. Ford's another, ooh, this is a problem, child. Ford just went from $12 down to $9.46. Monster volume out here today. Yeah, Ford's going after the 872 mark. What you do have, let's see if I can find this. You have an aluminum maker that makes windows, folks, in Colombia that is just having a field day. I suspect this guy's going to be sorry what he said, though, because what happens, I'll get this quote for you. So what has happened is that because of the tariffs on aluminum and on steel, windows, and in particular in Florida, well, any type of hurricane windows, folks, but, well, any type of windows. Windows are aluminum. You're getting hurricane windows, you're paying some good money for them. Bottom line, there's a manufacturer right now in Florida that is yipping it up because he is getting all the business from builders. Because what has happened is that a lot of this aluminum is getting imported into the United States, and guess what? We're paying for it like hand over fist. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. 877-927-6648. We get open, we take a look at the Microsoft. We take a look at Microsoft out here. So Microsoft's still at highs. You're down 79 cents out here. The high that was generated out here, the 25th of July, that got up to the 111 point. You're at 108.21. If we do look at the NDX 100, the 3 Qs, what you'll see with the 3 Qs is that it couldn't manage the highs, pulled off the highs. Now, in order for the Qs to get back in a lower range, folks, it's a long way down. You're talking about 175.21. So we'll see where this does shake out. The SPY, I would say right now, is one of the danger ones in a large way, and this is why. The SPY is, we still have that February 9th high volume low sitting out here, and when you put this on a chart, it's huge, man. I mean, it's a big number. You're talking about 252. We're 282 right now. And when you take a look at it, we've already basically tested these highs. Dramatically lighter volume of the highs. To give you an idea, last week we went up with 237 million. Well, you're coming into 604. 604 versus 237. It doesn't even fly. Then we come off that, and what we did do out here today is that you actually come off that with volume again, which is pretty intense. You know, you're not expecting that inside summer trading. You know, we came down on Friday with 77 million, did 65 today. Last week we made highs on 43 million, was on Wednesday. No, Tuesday. 42 million was on Wednesday, and 35 million was on Thursday. Then we come off of that with 77. There's your, when you're looking at price and volume, that is how that baby has not only set up, that's what it's doing. You know, you make highs with light volume, you test, you fail, you come off those levels, and as you come off those levels, you have some big numbers on the way down. Let's go over and take a look. In fact, I'm going to bring this up. Let me see. Well, first we can bring up Monsanto. So the devil, Monsanto, well, I got to bring up Bayer because Bayer owns it. They lost a monster case out here today, and this is going to be a big problem for them. Let's see, B-A-Y, B-A-Y-N. I got to go to Germany. Okay, so, whoa, that was a hit. Okay, so check this out. Bayer, which owns Monsanto now, that closed at $95 on Friday. It opens today at 86. It goes to 83. You're breaking. You're going to go after the swing point of 82. That's going to be a nice ABC structure on the way down. So let's see what the court verdict here was, what they're saying. Okay, so the true price of Bayer's purchase of Monsanto is suddenly in doubt as the U.S. Crop Science lost the court case over claims its Roundup weed killer causes cancer. The verdict wiped out $14 billion in market cap of the German maker on Monday, 20% of the total value of the acquisition. Oh, my God. On Friday, a San Francisco court hit Monsanto with $289 million in damages. The company owned by Bayer since June, but operating separately pending the completion of antitrust conditions, said the product is safe. It plans to appeal. Few were prepared for this. Bayer shares fell as low as 80 euros. Yeah, this analyst is saying it's possible that Bayer made a terrible miscalculation of buying Monsanto. Yeah, I'd say slightly. Given the appeal process, the final outcome of the case and the resulting costs, of course, are hard to predict. The market reaction looks excessive. That's what another company is saying, another analyst is saying. The Monsanto takeover has become less expensive than it was agreed to in 2016, supported by a favorable currency movement and Monsanto's efforts to reduce its debt burden. Bottom line is that it's problems in paradise. Roundup, yeah, it works good, but it kills everything. That's the bottom line. And that's been going on for quite some time. And I expect it will go on for time in the future. But Bayer is one of the largest chemical producers in the world anyway. So I'm sure they'll get over it at some particular point. We get over and we take a look at the inside the, so we just looked at rig. We go to Diamond Offshore. Diamond Offshore is another driller out here. Deep water driller this is also. Diamond Offshore is down 82 cents. This isn't as bad as rig, but it also is going after the lower end of its consolidation. And we put this, oh yeah, this is a problem too. Man, oh man, these stocks are, these drillers, okay? Shale is here, evidently. Shale is not only here, I suspect what we also have happening is that with the amount of electric that's going on out here, that's going to also hit them. What's intriguing about the Tesla deal, folks, is that if Tesla gets wound up, which they're going to get wound up with the SEC, and with basically attorneys suing them for their clients, we'll see what it does to the name, number one, and it's not going to help the brand, that's for sure. What you also have happen simultaneously very quickly is that the other car companies, they are getting into the aspect of electric, and they're doing it very quickly. So, well, I'm not sure they're doing it quickly, or everything is just coming out now. They may have been working on this for 2 or 3 years. Everything is starting to come out. We're going to have the image of just electric is not going to be just Tesla. You know, I suspect as we go forward next year, year and a half, bottom line, you're going to have a lot of it out there. And when you look at electric, I suspect what it's going to be the first that has to do with the mass distribution of industrial vehicles. It's not going to be you and I driving. I think the one that's going to get the traction is that whether it's going to be the Uber, whether it's going to be the Lyft, whether it's going to be deliveries, whether Google's in there, that is the industrial model that's going to be out there first. That is where whoever can get that done, and you know, whether that's going to be Chrysler, whether it's going to be GM, whether it's going to be Elon Musk. That's where the real traction is going to come in inside of the electric market. Because you got to remember something, then you are buying fleets of it. If we stay with the car market for a second, we get over and we take a look at Avis. Avis is trading $34. This baby, one-way trade. You know, it's been in a consolidation for a long period of time. This has a high volume low that's laying out here at $20. You're at 34. And if we take a look at the growth prospects, yeah, it's laying out. Well, it did 8.8 billion last year, 9.2 this year. They're looking to do 9.5 next year. You know, all these different modes of transportation are changing the way I would say that we all get into airports, get out of airports, get into transportation, get out of transportation. Dow Industrials finished down 125, Nasdaq off 19, S&P's off 10. Come right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2000, 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks, and we're going to get a lot of these 13 Fs this week, folks, coming out from the last quarter. If we go over to the GLD and we take a look at this, what you're going to see here, this is the big seller out here in that last quarter inside the GLD, Fidelity. Fidelity, they basically sold 6.7 million shares inside the GLD. Right now, as of the 30th, well, as of this filing, they say they only have 12,000 left. BlackRock is the ETF. CI Investments, not sure who they are, but so that's the on one side of it. The other side, you got a new buyer in here. It's as Fidelity sold. Let me see. Yeah, so Fidelity sold 6.7 million. Well, on the other side of it, you had a fund in Bermuda buying 8.8 million. Oh, look what they did. Oh, one second. Hold it. Oh. This is pretty wild. So check this out. Oh, my God, I'm glad I did this. So guess what? Fidelity, they just transferred it. Well, if you're watching Tiger TV, let me show you something. Fidelity looks like they sold 6.7 million, right? So, well, they did. They had to sell it out of that account. But watch what they did. I turned this up. This FIL out of Bermuda, that is Fidelity. And they basically not only sold the 6.7, they ended up buying another 1.1 million. And they transferred it into Fidelity International Limited and put that down in Bermuda. Now, they put that in Bermuda for some tax reason. We'll find out, but I'm going to do more work on that because that is intriguing, man. You know, because I had never seen this number up here before, and I'm looking. Of course, I look at the GLD quite a bit, but that was when you see a new buy in there, it's totally a heads up. That's interesting, you know. And bottom line is probably just a tax implication, and anyone who owned the GLD at Fidelity probably still does own the GLD at Fidelity. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking right back here, 8:30 tomorrow morning. Jason Path, great show. Morning market kickoff right here at TFNN. Wow! Go get him, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.